Hello and welcome to Small Cap Nation. I'm Jane King at the NASDAQ Market site in Times Square. With me today, Don Steinbrugge, managing partner of Agecroft Partners. It's a marketing consulting firm for hedge funds. So we're talking today about activist hedge funds. First of all, what is an activist hedge fund?
Well, an activist hedge fund is a hedge fund that takes a fairly large position in a company in order to create some type of catalyst to unlock value.
Okay.
So it might be acquiring a company that has a large amount in cash, making that company pay it out in a dividend or buying back stock. It might be the company has a number of unprofitable subsidiaries, getting them to spin those off. They might force a company to merge with someone else. So it's basically analyzing a company that they don't think is being effectively managed, that the management team is managing the company to benefit themselves, not the stockholders. They step in and try to implement some change to the company.
There's been a lot of that lately. I mean, I'm thinking of Yahoo. I'm thinking even there was some pressure on Apple a few years ago, have a dividend with all the cash they're sitting on. Some of the restaurant companies, Darden. Is that the kind of thing we're talking about?
That's exactly what I'm talking about. You know, total activist assets today are about 130 billion. Last year they approached about 350 companies, and they are very, very active in the marketplace today. You know, because they're so active, returns have come down a little bit because the markets are becoming more efficient. A lot of companies out there have activist strategies. So they're thinking about what activists are focusing on, and they're making their companies more efficient to make it more difficult for activists to get involved in their companies.
Now, is this a good thing for shareholders? I mean, theoretically it should be, but do hedge funds get involved maybe in a subject they don't know about or they have no expertise in, and sometimes it backfires?
Well, activists are very controversial.
Yeah.
You know, there are a lot of bad one-off stories of closing down a plant, people losing their jobs, communities being hurt. But, you know, overall, activists are positive. You know, they are causing capital to go to its best or highest returning potential. You know, they're causing companies to be more efficient, to be able to compete better on the global scene, which is one of the reasons why the U.S. stock market has done significantly better than most other countries, and where our economy is stronger than most other countries, because we're very, very flexible. You know, 75% of their activity is focused on the U.S., and you compare the U.S. to Europe, you know, we're significantly more flexible, and you know, I think activists are one of the reasons for that.
So tell me about 13 F's, copycat investors, and selling short.
All right, so activists have had a very difficult time over the past 9 months. Long term, they have done, a number of them have done extremely well, but over the past 9 months, they haven't done well. And part of it is you've had a lot of money go into the space. It's making the market more efficient. Another issue is that there's a lot of what I would say copycat investors or people playing against the activists. You know, they get 13 Fs, which show what positions the activists have, and they will either invest alongside the activists. And the activists, you know, a lot of them will have gates, they'll have lockup provisions for their investors. They want their capital to match how long it takes to implement one of these catalysts. And it can take a long time, you know, to force a company to make a change.
They would change the board makeup, things like that. That
Exactly.
takes a long time.
It could take, you know, 9 months. It could take a couple years. Well, the problem they have, there's a lot of other people that are jumping in or jumping out who are, you know, traders.
Okay.
And if these people jump out before the activists, they can force the stock to go down. Some of them are selling short against the activists, betting that, you know, the activist performance hasn't been well, they're going to have withdrawals. And so that's one issue the activists are having, is they don't control all the capital. You have these copycat investors that are shorter term oriented.
Now, risk off, how does that play into this whole scenario?
So what has worked for activists and a lot of long-short equity managers over the past 5 years, about 9 months ago, stopped working. You know, activists invest in more volatile trading companies. And about 9 months ago, you had a risk-off market where people were selling risky assets. So the securities that they held significantly underperformed the S&P 500. And in analyzing activists, you have to make a decision. did the market temporarily revalue the securities they have, or did the activists make a mistake? Was the activist wrong in predicting, what the fundamentals of the company are, what the profits of that company are? If they were wrong, then they probably should be fired. If it's a temporary reevaluation of the securities that they hold, those securities are probably going to bounce back, and this might not be a bad time to allocate to that particular activist manager.
And the lack of risk control, what about that?
Well, unfortunately, some of these activists have very big egos. And when a stock moves against you, the market is telling you that you are wrong.
Okay.
And if you're an activist, you need to take a step back and you need to really reevaluate what your value proposition for that company is. And at some point, you need to cut your losses. Most good long-short equity managers have what is called a stop loss. If the stock moves enough against you, you just sell.
Okay.
And then you reinvest your money in something else. Activists sometimes lose objectivity. They get too close to the management. They stay with it. They ride it down. Sometimes they double up on their bet. And, sometimes that causes losses that are unacceptable to their investor base, and that's what you've seen over the past 9 months. Some active investors have done very, very poorly.
Yeah, sure. Very hard to keep your head when you're in those kind of circumstances. So thank you very much, Don, for sharing Activist Hedge Funds and the role they play in our economy. Thanks for joining us.
My pleasure. It's good seeing you.
And thank you as well for joining us on Small Cap Nation. If you'd like to see more interviews as well as some really interesting things small companies are doing, you can go to smallcapnation.com.